This whole series started at the end of July, and then we had a lot of warm-ups, and the actual series started towards the middle of August. And now we're getting into the stage where we are doing some very practical workshops and identifying exactly what we need to do in practical terms and build a toolkit. And we're working closely with Microsoft's team right now to build a toolkit as we go forward. And this toolkit would be everything from building a business strategy and business models on the one side, and on the other side, we're looking at investment in terms of fintechs. We're looking at the future of marketing going forward. So, and then we'll connect all the dots of the future of finance. Now, I have coined this phrase, Future of Finance 5.0, because everybody thinks we're not at 5.0, and I believe we're very, very close to it, and it's at that deceptive stage. As we look forward, we're looking at the hybrid ecosystem, which we've already spoken about, a couple of other points, new world, new mindset, the whole thing. And again, this has been mentioned, but I'll briefly go back into it again, is that there are so many critical things that are happening which are directly impacting us, that we need to have a different thinking and so on at this point in time. So we've spoken about the big battle, but the key thing I wanted to talk about the big battle, apart from the things that I mentioned in terms of the incumbents and the insurgents, is how to unbundle a financial institution. So whether it's Abu Dhabi Investment Islamic Bank or MSNBD or Mashreq or any bank like that, how do you unbundle this? What is the core component of that? And this is how at the moment, and that's why the bankers have kept the lead for so long and will maintain that sort of lead, because at every layer, there are so many companies. And then moving forward, what has happened, the fintechs can come in because everything is as a service, and these companies have managed to aggregate those layers, the individual layers that are out there. Now, this was a pre-COVID survey that said that companies are not prepared for this future. This is pre-COVID. 93% of the CEOs say that new technologies will fundamentally change their business, but only 54% of companies have any kind of HR, people, human program in place to be able to handle the future. This number now post-COVID is likely to be closer to 70–75%. Looking at the future, we'll look at east-west, the connectivity and so on, and connecting the dots, and 5G is going to play a major role. But what I'm going to talk about, and we mentioned him a couple of times, is new thinking, new mindset, new sharing. And my thesis is that Ant Financial is likely to become the biggest financial institution in the world in about 5–6 years' time, and they're not even a bank. And that, to me, becomes the critical thing. It's basically a hybrid super app, and they are reinventing, and they'll probably reinvent themselves 3, 4, 5 times. And these are the kind of data points we'll have: 3 billion customers, multi-trillion-dollar valuation, 100 countries, no branches, simple wallet, everybody is engaged. The onboarding, the digital onboarding is almost seamless, and it takes about 2 seconds. And this is the kind of competition that needs to be looked at as we look into the future with new leadership, new mindsets, and new solutions. You've seen this part already, but I'll just reiterate 1 or 2 points. And one of them is that we are moving towards a hybrid environment. And I think the major incumbent institutions who will talk about this will be able to address that. That's basically all I'll share, and the rest will come through as we go along. And I'd like to, it was just few thoughts just to sort of warm things up. So I'd like to invite Hani from Microsoft to share his remarks with us, and then we can move forward from there. Hani, over to you, sir.
Tariq, thank you for the introduction. It's a pleasure to be part of this virtual summit. Very excited, really passionate about technology. As you mentioned, I am the Director of Financial Services in Microsoft UAE, based out of Dubai. Been in the industry for almost 20 years across different multinationals. Been banked by different banks for sure, but been passionate and agent of transformation for the last 12 years, working with financial institutions to support them and partner with them to transform. First, let me tell you, I'm honestly inspired with the different discussions we had in the previous session. The 4 different fintechs across Anush, Hani, Khalil, and Irim. great ideas. Happy to see how they took the journey, how the idea came, what is the challenges they faced, and how they managed to succeed and pass these challenges. Very inspiring. But honestly, what I want to look at in this session is to look at the other side of the coin. So we talked about fintechs, but I want to talk about the other side of the coin, the banking, the incumbents. What is the forces of change that is driving this transformation, and how they can transform and really partner with fintechs? So I know that these forces are already known to lots of people, so I will not take too much time on it, but I want to make sure that we have the clarity on that and take it forward from there. So prior to the pandemic, we've been working with financial institutions, driving the industry to leverage technology in order for them to compete and serve customers better. Continue to open marketplace around financial services, and have new product offerings that really personalize the customer experience, the CX and UX that was mentioned by Khalil in the previous session. The forces of change are already well known, as I said, but if we focus quickly on employee collaboration, which is the heart of any organization, and the workplace safety with the current challenge that we are in, and how we make sure that our people are safe when they go to the workplace, or they have the access to the tools when they are trying to deliver their work requirements and KPIs virtually as well. So this is an area that is a challenge that we can see. Changing customer expectations. The current crisis has made the customer have not only the changes that they required before the pandemic, but actually more after the pandemic, with the digital, mobile and phone, leveraging different technologies with limited branches hours. How can we get the same seamless services for the customers and deliver their expectations while they are not in a direct engagement with us on a face-to-face perspective, but for sure on the digital channels they are. The other area is on the cost optimization and the legacy systems. How can we transform fast? I think the team from Fintechs has mentioned agility and flexibility. How can we as incumbents be more agile, more flexible to adapt to changes environments, business environments, or challenging market situations, or challenging situations like the pandemic, for us to serve our employees and our customers better? A very interesting area that I will drill down more into it as we go, but I will give a glimpse now on it, is changing business models. With the rise of non-traditional players and fintechs, these are forcing banks to change their business strategy, forcing them to change the models, to blend a third-party engagement with bank-owned products to deliver differentiated capabilities and have the edge to compete in a very changing, fast-changing market. Fraud and cybercrime, for sure, financial crime is one of the top areas banks are trying to protect customers against, stop these challenges from happening in partnerships with different governments and different companies across the globe. And the last part, and Tariq, you mentioned this a couple of times, the regulatory environment and the complexity of this regulatory environment, and how we can take it forward and make sure that the incumbents are managing to comply with these requirements. To quickly move to the other idea and back to the changing business models on the partnership between incumbents and fintechs, there is lots of ideas coming every single day. Every day there is new ideas coming to challenge the traditional business model. So is the banks intentional about having availability of capital to invest in fintechs and fintech communities? How banks are thinking about building the muscle around partnering with these fintechs instead of competing with them. So the trio model, them working together as different entities to deliver a differentiated customer experience. And as I said, these forces was there before the pandemic, but the situation has forced this to accelerate. As Ilham has mentioned in her speech, that this acceleration is happening and has accelerated. Quoting our CEO Satya Nadella in last April in the financial results call, he mentioned that we have seen in 2 months digital transformation of 2 years, which is really changing the game for everyone. To move to my last slide and And to talk again to what the different speakers mentioned, if you think about working with our customers and leveraging this cloud-based technology to drive new solutions, we want to emphasize our customers that it's not only about technology. As we mentioned, technology is an enabler. It's actually about having the right vision, be it short, medium, and long-term vision, the culture and our people, and the change management supporting us to do that, and the unconventional partnerships for us to have unique potential and capabilities, partnering with fintechs and companies that can help us deliver more to our customers. So with that, I wanted to thank you, Tariq, for the opportunity, and who's better than our great speakers that we have on the call that can support us take it forward, between Mr. Sandeep Chauhan and Kushal, to share the industry and the unconventional partnership models and how we can take this forward. Back to you, Tariq.
I'll introduce Sandeep also more expansively, with your permission. Sandeep is the CEO of Abu Dhabi Islamic Bank. We've been involved with Abu Dhabi Islamic Bank for many, many years in different capacities when I was working at Bloomberg, and it's wonderful to have him here. He's a senior banker. He's a future thinker. He's very creative in his digital aspect of thinking. And he is the bridge between the past and the future in terms of where the world of banking finance is going. So you have to live up to all of that, Sandeep. So just tell us a couple of things about where you are at this point in time in terms of where Abu Dhabi Islamic Bank is looking at in terms of growth and development into this future 5.0 scenario that I had put forward earlier on, and into how you are really moving forward into the future, and also balancing it with all the fintechs which we were talking to in the first half.
Sure. Thank you, Tariq, and thank you, Hani, for bringing this session together. To all our listeners, by way of introduction, Abu Dhabi Islamic Bank is the world's 4th largest Islamic bank, and is the world's 2nd largest digital Islamic bank. So we spoke about scale, we spoke about many other very, very interesting views were heard today. And you know, the debate between fintechs want to be banks want to be fintechs, it has been discussed sufficiently. At the end of the day, customer is king, customer will decide. We can keep talking what we want to. They will decide who survives, who perishes, and so on and so forth. At Abu Dhabi Islamic Bank, I already shared with you, we've got a fairly large digital presence. My views are that, like most banks, we have focused on digital outside. We have been working, like most other banks, in trying to digitize on the customer touch points and trying to deliver products and services that we feel will excite the customers. And we as banks have made much lesser forays into digital inside. That said, the strategy at the bank now is, we called it deep digital, which means we need to start going deeper into the organization, from moving down away from the touch points and moving into the middle office and back office functions. And when we stood back and look at that strategy of deep digital, we recognized the piece that will fundamentally change the way banking is being done today is the power of bringing AI and AI-enabled capabilities to across all parts of our organization in truly delivering meaningful digital experiences to the customers, to the employees, to the partners, to the ecosystem that we play in. So at Abu Dhabi Islamic Bank, building an intelligent enterprise is what we are focused on. We speak a lot about becoming a digital bank. I would like to say that we are now beginning to think of how to behave like a digital enterprise. And the distinction between the two terms is just to try and create a very clear white space between the customer-facing parts, as I said earlier, are called the digital bank, and everything else that happens inside is what truly digital enterprises are doing. And I think the team here, the panel, is very experienced. They understand the difference between those two aspects. To try and bring this conversation back to the earlier discussion of the fintechs and what role should they be playing, and clearly the whole fintech ecosystem is evolving, and there are organizations of different sizes, different maturity, different ambitions. So it's very hard to generalize what the fintech ecosystem should do. But I will speak to the audience with my limited experience for the past 5 years in working in partnership with Microsoft and having worked with 12 fintechs now for the last 5 years here in UAE. That they bring terrific point solutions. They have identified specific gaps in the market or could bring innovative point solutions to address real world problems. And incumbent banks or receiving banks that want to partner with the fintechs love them for that. For the freshness of the idea, the freshness of the innovation and ability to go to new segments, deliver world-class experiences. And in return, the banks have to offer what I call as the industrialization of their solutions. I don't think it's fair to talk about Alibaba, Alipay in this context because it's a big tech and it's blowing everyone out of the water. But we are here in the UAE and we are focused to try and develop solutions that will work for us. So the banks are responsible to bring that industrial capability, which means the complexity of the regulation, the complexity of the nature of technology architecture that is prevalent in our world, the complexity of the skills that is available in our market to deal with these real situations. And that's where I have seen we have built these successful partnerships with the fintechs to help take the bank and its journey forward. The one thing that the one thing that I have found, and I would advise the fintechs or startups on this seminar today, is to be a lot more singularly committed to the incumbent bank that you deal with. We are already trying to create magic together with the secret sauce that you have and the customer base that we have. And we find that the fintech organizations are quite stretched in being able to deliver their technologies and their thinking. And then they get distracted with wanting to go and serve multiple banks, multiple customers. And they begin to lose the ability to deliver the full magic of what they have, and we have seen it's very hard to keep their attention span. And we understand that they are also driven by their stakeholders, their investors, to build not only a revenue model, but also a sizable customer base. So it's not an easy one to solve, but I would I would like to see a lot more commitment, and I'm not saying exclusivity, but you need to almost commit yourself in that ethos of exclusivity for a much longer period than what we observe right now. Clearly, the incumbent banks have many problems of their own. They're not least hiding behind regulation. They have problems of aging legacy infrastructure. They have problems of their commercial processes on procurement. They have difficulties on their change management processes that we need to learn with. But I can say this on behalf of most of my colleagues in other banks. We are really, really hungry to work with you. We don't see you as competition. We see you as additive. We would love to see you flourish. We would love to see you, grow your franchise, make revenue. The bigger you grow, the more chances of success you have, and our ability to have much more satisfied and a sticky customer base. So those are some of my thoughts that I wanted to share, Tariq, with the team. I am seeing very little in terms of artificial intelligence coming to the true power of AI has not yet played itself out. We see a lot of very clever UI, UX, and some very clever product innovation, but I really don't see AI in the hands of our customers. So with that, I'll hand it back to you, Tariq. Happy to take any questions or any comments.
Thank you, Sandeep. Thank you for your remarks. You touched on a few very interesting points, and one of them was really a very interesting insight for me this morning when we were having our session, little chat. And I would like to reiterate the point that you made, and that is that as you team up with either invest, partner with a fintech, what you were saying is that they need to be more married to you rather than just dating you. They need to be engaged in a more comprehensive way. And immediately following you, we have Kushal Shah, who's the head of digital at Roland Berger for the very big region here, but also he's an angel investor and part of the Dubai Angel Investors and Saudi Angel Investors. And he nurtures these young people and these young organizations, and he's a mentor to them. Is that the kind of partnership we need to build between banks and angel organizations? And Kush, by all means, you can comment on that also. Is to be able to pull that together, is that the harmony that we are trying to create?
Yeah, so I think angel, I'm glad you bring up this point about angel. The angel, the VC, the angel investor needs to have a little bit more skin in the game to us, not just their investment. Because, while I have experience of working with 12 fintechs, there are 3 fintechs, which is almost 2 years into the journey, like startups, disappeared. But I have launched a product by then. I have customers who are using that highly innovative capability. It's running on a Microsoft cloud. Now what do? What's my protection? Talking about just escrow and code base is of little or no use to me.
Interesting.
Because I'm completely and absolutely hooked to that product. We don't know the technology at all. So I would be really glad to see the protection, the early symptoms of stress from and get some level of engagement and proper governance. In this case, you're referring to Angel, but you get the point. The primary investors need to have, when you're especially dealing with an incumbent bank that's got a lot more at stake. So that's my thoughts, please.
Sure. Kush, wonderful to have you in there. I thought you could dive in here and then we'll go back. Can you comment on what Sandeep said in terms of how to bridge that and to have more skin in the game with the bank and make sure that the fintech, and the small organization doesn't disappear? Your quick thoughts.
Sure. My theme for today is going to be small is beautiful, and there is a reason behind that. By the way, anybody who hasn't read the book by Schumacher, Small is Beautiful, should consider it. What happens let's take all the digital natives, which are typically people below 25 years, to be honest. Yes, there are lots of digital natives that are, say, 40, but most of them are in the young age. They think and act and behave completely different from us, completely different. And it's very hard to actually, think like them and actually work like them. And the only way we can get there is to bring it to smaller pieces. So the question around, if you have, 10 startups, 7 of them disappear, and they're part of the backbone of the bank. What's very clear for me, to achieve scale for me now, it's to go from big to small. You go small to achieve scale. Why? You take the product. Now products are becoming small for financial inclusion. Products are being driven around less friction rather than more friction, which means the product elements the feature is a smaller feature to deliver that. The architecture is a lot more modular rather than monolithic. So that's also becoming smaller. The way you build is more sprint driven rather than waterfall driven, which is again much more smaller. The organization and how the organization makes a decision is a lot more smaller. Where the organization makes the decision is a lot more smaller. The processes in which these decisions are being made are becoming a lot smaller. The life expectancy of the product, of the employee, of the firm, I think Roberto mentioned that earlier, those are reducing to becoming a lot smaller. So in that sense, yes, everybody we interact with, including our suppliers, are going to have a smaller setup, a smaller organization, a smaller cloud-driven. And the story there for me is quite, let's call it rotational, because I just want to give a bit of background to why I'm saying this. I was born and brought up in Kenya. I left Kenya, as a young boy, went to Cambridge, spent 12 years in the UK, and thought, okay, I go back to Kenya and I bring all these things I've learned, everything I've learned in the UK at Cambridge, doing economics, etc., and I'll bring it back to Kenya. Guess what? The innovation in Kenya was significantly better. M-Pesa just launched. M-Pesa was one of the kind of craziest innovation you can imagine, with very old technology. The technology behind it was nothing. Yes, it's GSM, but what they did was on basic technology. And they disrupted the friction that existed because there was a need to disrupt the friction. The friction was very simple. You want to send money from a city to your grandmother who is living in the rural area, you'd have to give it to a driver or somebody who would then have the money stolen, would charge you commission. You don't know when it reaches. You'd have a lot of trouble. Now, just sending it simply through a wallet became a big shift. So what they did was they made it small. 35, when I was about 35, 40, all of you guys, the Googles, the Microsofts, the Apples, etc., were becoming big scale. And the thought was all about big. Now you have blockchain. Now you have all the new thinking that's coming out, which is also driven by becoming smaller. So, sorry, just to answer the question in a very long-winded way, Sandeep, I actually think having those small guys be in the backbone, whether it's a escrow for the code, whether it's a cloud-based setup, whether it's build, operate, transfer, the more modular it is, the better for you. And the more protection you get, because you can't depend on a single monolithic environment anymore.
So thank you for that, Kushal. I will go read this book you referred. I think your philosophy of small is powerful. I think you explained it extremely well. And you know, my comment about they're disappearing is not unfounded, but when they do disappear,
you're left with a hole.
we are having to recruit, and I've just been through that cycle twice in the last 3 years. We've had to recruit that entire team, and that team just doesn't understand, like you really said. They think differently, they act differently, their passion is different, and we are not yet that. But one of the things that is happening within the big banks is we are also trying to create our own challenger, the bank within a bank, which can respond to exactly the points that you made. We are also trying to create a small bank within the big bank and see it succeed. So thank you for those comments. So Tariq, back to you, sir.
Yeah, I think that's interesting. One of the things you said, a small bank within a big bank. I would put a little, perhaps, comment on that. And Paul and I work on this all the time. That the smaller bank sits on the edge of the big bank, not inside the big bank, because inside the big bank you would squeeze it and kill it. So that's the first thing, is to make your core is your core. Create these as edges, perhaps. And create 2 or 3 edges from outside, and go off-brand, completely off-brand, so that Adib's brand values are maintained, while these guys can go out there and build their culture, and then relate that culture closely back to what Kush was saying. So you are protected because it is an institution, a separate edge business that you are running, which has the same value system as Kush is talking about, and the same knowledge base, and you can recruit better, you can engage better rather than a big bank. And that's the circular thinking I'm putting together here, is that we need to look at core and edge and separate them in some ways to give you more protection and to give more freedom to the insurgents.
So actually, let me answer the original question, which was around what's the role of angel investors in this. What we've done with Dubai Angel Investors, and now we're just about to launch Saudi Angel Investors, is our angel base is CEOs who have been through this process, who are incumbents, who have felt, built these DNAs at big organizations. And so they understand the pains that the organizations have to go through, and they're willing to give their time and effort, because that's the purpose of what they're doing, to the startups, to mentor them and say, startup, think like a startup, act like a startup, but we will mentor you in terms of the real business, the how to interwork with them, how to build that bridge between the let's say the customer base, which is typically the B2B customer base, and the startups. And I think that's where we try to understand the issues in the incumbent organization versus the new organization, and we try to build a bridge which is relevant, because otherwise the 2 DNAs will just not match.
Sandeep, what would be the average age of the board of ADIB or the executive team of ADIB? And this is a trick question.
Not a trick question. No, I think the board, interestingly, was reconstituted about 18 months ago.
Right.
And I would say so it's a board of about 8 people, only 2 members of the previous board continued. They would be in their mid-50s. And the remaining 6 members are actually, in their late 30s, early 40s. And most of these people are also connected to government. It so happens because we are an Abu Dhabi-based bank.
Yep.
And the interesting part is, as we all know, the government in this country is so much more advanced and innovative and forward-looking that private enterprises are clearly struggling. The likes of Hani and his team in Microsoft show a lot more love to the government. So we are always trying to catch up. But that brings me back to your question. I am working with a board that is very hands-on with the kind of quality of conversation we are having today. And they are exposed to global giants and global practices. Not least, we've seen the news of the arrival and the partnership of the government is opening up with Israel. And all of you are sitting at the cross section of that.
Yep.
It is going to give a very different boost to the whole fintech ecosystem. The arrival of it's coming from the absolute home of fintechs. So, yeah.
So Sandeep, I mean, one of the initiatives that we have, Paul and I, we work on is youth advisory boards, future advisory boards, where the average age is below 25. The kinds of people that Kush was talking about, and a board like this sits beside your 8-person board, but you give them teeth. And these people will come from different backgrounds. There'll be anthropologists, there'll be data scientists, there'll be other kinds of people, and ask a different set of questions. And be much closer in terms of being digital natives and ask that piece. And we've done that. We've practiced this in many places, and we found that extremely rewarding because the 23-year-old is asking a completely different set of questions, and we've done it with the Dubai government and others. And I found this a very interesting way to bridge some of the new conversations that are being had with the youth environment. Also, the culture crossover starts coming in.
I'll tell you something. I'm glad you mentioned it, and we'd love to get connected with that. You'll be a little surprised that in a country which has a little over 1 million Emiratis, 85% of them are our customers of Abu Dhabi Islamic Bank. You'll be even more surprised if I tell you that in 2020, 30% of the new customers we've acquired are below the age of 19. So you're spot on. If you can bring in, you and I can't think like a 19-year-old, and if I can at least get this youth board that you speak about, which thinks like a 25-year-old, can design. Kushal mentioned the micro strategy of small or taking micro segments and going after that and building on the edges. And we'd be love to absolutely invite fintechs that want to play in developing youth segment solutions. All I'm looking for is ideas. I'm not looking for a cooked solution. So if somebody has an idea and wants to germinate that idea, we would love to be the organization to take it from ideation. In fact, that's another thing, Kushal, you may want to think. Incumbent banks are not only looking for cooked solutions. We will love, like you do, jump on an idea. We will hold hands with you and fly with you on that idea. Some ideas will work, some will not. But that's where the cusp of true innovation can come and true sense of ownership. Yeah, Paul?
Paul has a question. And Iram, would you like to join in the conversation? And also Roberto, please.
I had in addition to what Sandeep said, because you mentioned it several times, and that is what I feel. You are not satisfied with the technical environment that you have at the moment. A lock-in, I heard you talking about a lock-in and those kind of things. And what I usually see in especially big companies who are in the process of digital transformation 80% of those digital transformations fail. And they fail for a couple of reasons. And one of the reasons, and I don't go in too much depth of that, one of the reasons is that digital transformation is conceived and sold or bought as a project. And if you should not do something in digital transformation, is conceive it as a project. It is a lifelong, ongoing process. And you cannot put that in the realm of a project where consultant companies coming in and do the trick and they leave. It is something that you have to do with your own organization and in a strategy. That's one thing that I see, and the whole thing is about shifting a mindset in how are you dealing with the new world, the new reality. That's key.
Maybe an example just to discuss that. I think there's a need for schizophrenia within the bank or within any organization, which is if you take the customer base, take the very young customers that Sandeep was talking about, let's say the 22-year-olds, 25-year-olds that might have small amounts in their accounts, etc. Today, what do? They're using somebody like Dapi and giving away their password to their account and letting them scrape and letting them do these things, which I would never, I cannot even think about giving away my password to any entity. It just doesn't work. So we have two different segments who are willing to do completely different things. So do you take open banking in a certain direction, and how do you think about it? Do you take Bitcoin as a reserve currency or not? Depends on who you talk to and how you're thinking about it. So that schizophrenia is just a necessity now in those decision-making processes.
One of the other dynamics, and then you can respond together to this, Sandeep. I'll ask Iram also this thing. But one of the dynamics that we noticed, and I'm being provocative intentionally, is that you have a big consulting firm and a big tech firm, and two big. We've got Hani sitting there from Microsoft and Kush from Roland Berger, could be a McKinsey. They become an insurance policy, and they just come in and deliver projects, and everything is nice and cool. But as far as the bank's concerned, as Project Paul mentioned, is it just project based, or is it just the whole mindset shift piece that needs to come in and use the collective intelligence of the bank and its employees rather than the collective intelligence of the consultants or the tech players?
I can confirm to you for the UAE, at the board level, the mind shift has happened. The management is unable to respond to the board shift that Paul is referring to.
Wow. Okay.
And they would only welcome with open arms the suggestions that you made earlier about this youth board situation, because they want to see, and I experience this every hour of the day. They have moved on from calling it a project. It's the management which is struggling to still solve for it. And I don't think we look at Microsoft or Roland Berger, etc., as insurance policies. The intellectual horsepower that they have access to by virtue of being global enterprises, we don't. So the reason we latch on to them is for the intellectual capabilities that they have seen in other markets, and that they can transfer to us very quickly, is the piece that we are attracted towards. And these are global enterprises which have understood the local cultural complexities and talent gap and help us bridge that. But most of the conversations we have with these organizations of this size and the McKinseys, we are talking to international colleagues. We are not talking to their UAE colleagues alone. With Hani and his team, we are all the time talking to people in Seattle or somewhere in London, and so is the case with the consultant.
Thank you for that. My question was touching on a slightly different aspect of it, and that is I don't know how many thousands of employees you have within ADIB, but let's just say it's 10,000. I mean, I'm throwing a number in there. The collective intelligence of those 10,000 people, properly harnessed and orchestrated with the support of all the big boys from outside and all the intelligence from outside, is actually going back in and getting that intelligence becoming an integral part of the solutions. When we're running sprints and those kinds of work, we actually build the muscle of the organization rather than give them domain expertise. Because the people within the organization are the ones who will execute strategy. They're the ones who will own it. They will be the ones who will be passionate about it. That's.
I agree that creating a sustainable model, engagement model, is the formula.
So
I'm glad to hear that.
You mentioned Israel coming in, the heart of fintech. China is a possible entrant also. Turkey is quite advanced. Aaron, do you want to comment on the kind of things that are happening in the banking and the financial sector, not just fintech, and how that overlaps with this?
Mm-hmm. Okay, actually, Turkey has done many things already in the last 20-25 years. And we have already done the buy now, pay later 20 years ago. We have done the installment, we have done the bonus programs, we have done the mobile apps more than like 10 years ago. And it was very important what Kushal was mentioning, that banks already created their little mini banks like mobile banks or digital banks within the bank since 15 years. I myself haven't been to a bank branch maybe more than 10 years already. So the banking ecosystem has been advanced so much, but at the end of the day, what has happened is banks had a huge fight, and the fight has happened over retailers and with the credit cards. So they cannibalized each other harshly. And at the end of the day, the customers lost, because in the beginning, the banks were giving a lot of giveaways to the customers, giving a lot of percentages, points, and everybody was winning. But at the end, of course, the bank couldn't sustain that. And then they start to lower their benefits. And the silos in the banks start to pile up. And they were not agile enough to change their boards, to change their management, to move away from this banking thinking fast. Therefore, the fintech ecosystem has developed also very much in Turkey at the moment. And it's now like growing like crazy. And now the banks are trying to work and acquire fintechs and work with us in different projects. So it's getting very interesting here. It's quite a warm market.
A quick comment from you, Roberto, and then I'll do a couple of poll questions, which would be fun.
So I'd like to also make a comment
yes,
after
of course.
that, please. Okay.
Yes, of course. Please, Roberto. Sandeep, you're most welcome to make the comment.
Okay. Thank you. I agree that China and Turkey have been very advanced, and I've been very keen to bring in solutions that have been developed there, particularly payments. As she said, Turkey's been there on contactless payments for maybe 15 years, if not more. But both these markets, surprisingly, have been unable to penetrate away from their home markets. And I believe both the language barrier in which their platforms are developed is so significant that you just cannot, take it forward. So I just want to make that comment that it's not for lack of technology, trying to get the technology. You cannot get the Alibaba. I've partnered with Alipay on several occasions. Their approach to customer UI UX is so different. Elegance in UI UX is non-existent. They'll take every pixel on the screen and plug something in there completely. Whereas the whole UI UX science is declutter, single click, and so on and so forth. So I think there are some significant challenges to be overcome. Particularly in Turkey, I think I was very surprised how advanced they are, but how it's just impossible if you don't. Everything is programmed in the language, and you can't bring it outside the country because nobody else can do the programming.
Interesting.
Maybe I could make a comment on that, just very, very
Yeah,
quickly.
sure.
It was purposely provocative, but
Yeah, Sandeep, it's actually not the language barrier, because all the programs, even in the banks, they have multiple languages behind it. But I think it's the culture and the approach of the Turks. Being a Turk, I'm sorry to say this, like, but I think we're too insistent on what we know. Because when you go to a different market, you have to forget what you know, and you have to start adapting to that market. Just bring the technology and rebuild every business rule, business logic on top of what you know with the technology. Turkish banks, you know very well, they've been to Romania, Bulgaria, like many other near East countries as well, but like they couldn't manage it better than what they were doing here. They couldn't manage in CIS, they couldn't manage in Eastern Europe, just because they insisted that because we are a guarantee bank, we do it like this, we have been successful, now it will work here as it is. No, it doesn't work like that. So because the banks were
Can I make a...
Please, sure.
I'd like to make a small joke on this. You know, bankers and technology architects, they're similar. They have one similarity, which is, for me, they're like dentists. You only go to them if you really need them. Yeah, you don't go otherwise. You go get the product and go self-service as much as you can, because those two.
Okay, fine.
Talking
in
about
one go, he's cleaned everybody out.
well,
I have one.
I would like to respond to the earlier comment about Turkey. I would say that we've done that, you know, having been able to solve what you just said. We've gone, and at Abu Dhabi Islamic Bank, you'll be really delighted to hear as a Turk that our entire digital factory with 300 people is completely led by some of the best professionals from Turkey. So we've gone and done the next best thing that was available to us. We brought them home from the best place. So, and now hopefully with Israel opening up, we'll see what happens. But I agree, it's a great place. So back to you, Roberto, over to you, sir.
No, it's. I love the conversation. So very, very interesting, and I feel this could go on and on, right? So
that's right. But it's
on the
a Wednesday evening when we need to jump onto a party.
Indeed. So let me have a couple of fun polls, so we can have a little bit of a laugh. First quick question. We've done this thing before also, so let me just launch the poll. It'll take about a minute or so, but it'll give us some fun. What are the big major challenges for the banks in the future? Is it tougher regulation, growing competition, demanding customers, or interest income? So this is the first question. If you guys can see that. The second question is, which of the following topics do you expect to dominate the financial industry in the next, say, 12 months or so? Income growth, cost reduction, or risk and compliance regulation? And I'm not getting responses. I'm wondering why it's not happening. Have I done something wrong?
We can't. It's blocked. The hosts and panelists cannot vote.
Oh, that's a pity, because we would have found. But anyway, the major challenges of the bank, the people that are coming in at the moment, the demanding customers seems to be the one that's leading. Cost reduction and efficiency gains in terms of the topics to expect to dominate the financial industry in the next 12 months. Income growth is also very much there. And which transformative technology do you think will have the most impact in the next 12 months? And AI has taken the lead on that. So that was a quick poll test, so just to sort of get that going. And here are the results that have come through from there. So demanding customers, cost reduction, and AI. Those are the three winners. And I've done this one before a couple of weeks ago with another group. Very, very similar results. So basically, that's that. So closing off, I'm being a little bit self-indulgent. If you can just spend literally 30 seconds and give us an overall satisfaction of the workshop. Unfortunately, the panelists can't vote, but hopefully we have a reasonably good comment there. We'll launch the poll there. The second one is how impactful, how would you improve the experience? Sorry, the second question was how impactful was the content? in terms of providing insight? How would you improve the experience? And would you recommend this to other people and similar colleagues and friends? And so slowly they're coming in. And yeah, now we've been doing this. And interestingly enough, we did one last week. And the question was, while this thing is going on, the question was that are the organizations, financial institutions, ready to cope with this this pandemic and all the elements that are there? 70% of them, of the people polled, said no, they're not ready. Then the second question was, would you like some tools and support in terms of finding quick, fast solutions to some of your current problems as you go into next year? And 100% of the people said yes. Which was the first time I ever got 100% in anything. So those are the questions. Now, we've ended the polling. Overall was excellent, so that's good. What would you improve? Nothing. Oh, interesting. Would you recommend this episode to similar? And 100% said yes. So I think this is slightly skewed. We have obviously some friends left over there, so that's good. All right. So to wrap up, this was not planted. Obviously, it's just come from the people. Let me do a quick round and just 30 seconds as a final comment. Iram, as a lady, we'll start with you. Your final comment that we take away from this whole session, please.
Thank you very much, Tarek. Well, I mean, at the end of the day, the banks and the fintechs, they will have to work together, and it's better they work willingly together. So it's not going to be like push, but rather a pull relation would be great. As far as the millennials are concerned, you know how much work we're doing on millennials. So maybe you can have a separate session on millennials. I think that would be an interesting topic for both sides to tap. So it was a wonderful group to be a part of. Thank you very much.
Hani, your final thoughts.
Yeah, thank you, Tarek. So quickly, just to say, I think partnership is key. The partnership has to be there. I agree with Iram, a pull partnership, both benefit from the partnership is key. Transformation is a journey, not a project. It has to continue as a journey, and it has to be built as a journey. I think the last piece is culture and people are key for this success. And I think this is how we take it forward. Again, great group of people. Thank you very much. Amazing experience. Thank you, Tarek, as well.
Thank you, Hani. Roberto.
Yeah, thank you. No, just to adding on what Hani and Iram just said, I think it's also a mindset, right? I really loved when Sandeep mentioned about the mind shift happened already on the board. It's a management that needs to update on that, right? So it's a culture and leadership are key in making sure that mindset is implemented. It's not just about focusing on the job to be done, but also sometimes the sources needed for people to get the job done. So that's extremely important. And I enjoyed a lot the conversation from our founders and the fintechs to the perspective from Kushal and Sandeep. So thank you for setting this up.
Thank you, Roberto. Kush, final thoughts? Small is beautiful. You're going to start with that?
It's Friday night. It's Wednesday night. No, the only thing I would say, as everybody said, communication, as you say. So we need exactly these kind of panels where we can have those open channels where, some people like Sandeep are there to react to the startups. So I think those open channels are quite key. Thank you.
Whoever is giving you this cool software is amazing. You come in as Einstein, you come in your goggles, you've done everything. Brilliant. So see, this is the hybrid environment we need to have a bit more fun, because these webinars become very fatigued after a while. Anyway, thanks for that laugh for us, Kush. Sandeep, final word with you as our senior guest. Your thoughts, our takeaway from you.
Thank you. First of all, thank you for inviting me, and thank you, Hani, for thinking of me. Truly, inspiring sort of discussions. Glad to see this level of intellectual thinking is available. So Tarek, I'm going to leave a request with you. At least if I could organize an in-person lunch or dinner with the panelists that you've had. I know Paul and a couple of others have gone off. So through Hani and you, we could coordinate. I'd love to host this. We have adequate social distancing with the right number of people allowed to attend physically.
Yes.
We should meet. We need to spend several more hours. We owe it to the fintechs out there, the millennial, the youth organizations of the future. We need to bang our heads a lot more. So thank you once again.
It will be an absolute privilege to join, and we will invite President Obama Shah also, because he's now reappearing as President Obama. Dude, brilliant, love it. So my final comments and thoughts is that Future 5.0, Banking 5.0 is nearly here. I talk a lot about the youth element, but I talk a lot about going back to basics and going back to our core baseline. And I think that, to me, about trust, about humanity, about empathy, all of those key elements need to come in. And in this entire session, I wanted to start with it, but I wanted to play with it and see how not once did anybody mention the word trust in the entire 2 hours. And that's wrong. Trust and ethics has to be an integral part of everything we do, and it should be literally permeating every aspect of our lives. And we do a lot of work on trust to do that.
I did say I don't trust anybody with my password.
Yeah, you did, actually. You did. Indeed, you did. And finally, this hybrid that I was talking about in a ubiquitous environment, this is a wonderful future to be looking forward to. And with visionaries like Sandeep, with all the engagement with the technical people and yourself, Kush and Iram from Turkey, it's a wonderful way forward. So let's get together, let's keep doing this. And I'm very grateful, very privileged, very humbled for all of you to attend and be part of this. Thank you, sir.